Hi everyone, it's Stuart here without his headset on, and he feels a bit. I feel a bit naked, to be honest. I've got a brand new microphone here in front of me. It's very sexy. Do you want to have a look at it? There we are. It's a Shure MV7, so hopefully it sounds great. I do feel very naked without the headset on, but anyway, there we go. I've upgraded the lighting as well, so any feedback and comments about whether it looks better or worse? Obviously, we can't improve this old face, but as far as the audio and the lighting is concerned, we'll might have a look at upgrading the camera as well in the not too distant future. But anyway, today is Tuesday, the 6th of August. It's very, very quiet on the calendar today. So what I thought we'd do today is actually do some sort of live trading if we can. Obviously, we got our 5 or 6 strategies here on our Tradelocker outfit. Here we are, the crossing EMA, pivot points, our Bollinger Band and stochastics, MACD and SAR, and our demo account with our demo setup with the I think that's got the ATM on it, or the VWAP, I can't remember. Anyway, we'll have a look at all those setups and we'll just look at one asset. We'll do the euro or the gold or something, everything that everyone's most interested in, and we'll see what happens. We'll have a look at the stock markets as well, because they're the ones that they're the real cash session, if you like, the stock markets, because obviously Forex, remember, is a 24 hours, virtually 360 plus days a year traded asset between the big banks. So there's no central exchange, whereas the stock markets, the S&P 500, the Nasdaq, the FTSE in the UK, the DAX in Germany, Nikkei in Japan, they all have opening and closing time. So our derivative market, which is what we're looking at here when we trade the indexes, so here we'll choose the DAX as an example. Obviously dependent on the opening at 8 o'clock, the closing at excuse me, at 4:30, and I've left my phone downstairs, which is not a great idea in case people are contacting me. So so I'll just tension that boss, see what it sounds like. So yeah, we'll have a look at these setups. So so far today, as I said, it's really quiet. If we look at the economic calendar for today, even with the single impact events, not a great deal going on as far as market moving data is concerned. What is moving the markets today has been the announcements, obviously the earnings announcements. Disney's report this morning, they're down in pre-market. Uber are down nearly 3%, and McDonald's actually up 3% pre-market. Global sales are up 4%. I don't know what that says about us all, but McDonald's outperforming. Trump apparently has a potential big announcement at 4:30 New York time or Washington time this afternoon. Lots of chatter about tariffs of potentially 100% on any country taking oil from the Russians. So his bromance with Putin looks like it may be completely busted at the moment. Currently, obviously, that swings and twos and fro's is like a pendulum. But Putin's in no rush to do a peace deal. Remember, Trump tried to lay down a law saying, he had 10 to 12 days to come forward with some ceasefire proposals or better ceasefire proposals for the Ukraine conflict. That doesn't look like anything's happening, anything along those lines coming out of Russia. And indeed, the Russians pushed back on that, and then Trump moved some nuclear subs around the world, shall we say, into strategic areas. But anyway, so that is obviously what's underpinning the markets. What's underpinning the rally we've had this week, you see this, the 4-hour chart here on the DAX. What's rallying the stocks this week is this sort of the tariffs aren't as bad as they're going, as many had anticipated, which obviously we had that big fall in April and we've recovered from that. But the deals that are being put together, apparently something like, somebody was saying on Bloomberg this morning, some analyst from Morgan Stanley, I think it was, nearly 30% of the world has now done a deal of some sort, or some sort of framework agreement with the Americans. So 28%, I think the actual number was, I made a note here, global GDP has got some sort of deal with the United States. Obviously, it's worse. Their trading position with the US is worse than it was pre-April. But at least the uncertainty is gone, and that's the most important thing that drives markets. Markets hate uncertainty. So this massive fall we saw if we just use the DAX as an example, this massive fall we saw in April and into Liberation Day here, the 7th, the 8th and 9th of April. We bought all that back and some more. We then dipped again here in mid-June, and we rallied into these new all-time highs towards the beginning of July. And then we went sideways in July here on the DAX, and then we've come down in the last week or so, but coming back. We look at the similar pattern on the Dow as an example of the US markets. Big move down here, rally up, but the US markets have continued to move higher. So the Dow was the weakest performing last week. We came into this 50-day moving average we mentioned yesterday and last week. Obviously, we bounced a wee bit on Friday on the week non-farm payroll data, and then we were down a tad yesterday, and we're up a tad today on the Dow. The S&P 6.3, back over 6.3. The cash market closed just under 6.3 yesterday. So there you go. So the daily move there on the S&P 500 and the Nasdaq 23,000 has been recovered today from a move down yesterday back into the 20-day moving average. So again, little waiting for some significant direction or more significant direction in the indices, but it is August. Traditionally has a reputation for being quite poor. It's actually okay, the stats. It does all right. It's not that bad a month when it comes to stock markets, August, but it does get a bit of a bad rap. And obviously the other key thing that's kicking around Washington and obviously impacting Chicago and New York, where all the US traders are, is this the future of the Fed, and the new leader will even the comments about Powell actually staying on as a governor. It's very, very unlikely. I mean, nobody else has done that, and he's not the sort of person to hang around. Having been chair, he's technically still could be a member of the Fed, but that isn't really going to happen. But Trump is using that as another stick to beat him with, and get one of his yes men is a bit harsh from my point of view, but it really what it could be, and that would really underpin the dollar and nervous the markets, because the markets like independence from the central banks, and the history of the Fed has been politically independent of the president, but we haven't had a president like President Trump, have we? Especially in his final 4-year window. Anyway, that's where we sit at the moment. I say not a great deal going on today, Wednesday. We've got probably the most important thing is probably the official oil inventories later on. Looks like this afternoon in an hour or so. So you see, there are only one bull head data today. Construction PMIs in the UK miserable. Again, they've been pretty negative, but they're particularly miserable for July. Construction accounts for about 6, 7, 8% of UK GDP, so it's not massive, but it's one of those sentiment things. People like to say, people invested in building companies and construction would like to see lots of cranes everywhere. It gives a feel of production and of affluence and of development when there's not much going on, house building or skyscraper building, not many cranes up. People start to question the robustness of an economy, and things are still fairly miserable on that front. But that's quite a significant miss there for construction PMIs for the UK. So anyway, let's have a quick run through where we are, and then we'll have a look at some possible trading the indexes as we go into the open. So the dollar this morning or today, if we look at the euro, we're at 116.30 at the moment. So we had a bit of a flat day yesterday, not a lot going on as we started the week. We're a bit more positive today, euro-wise. So euro's up today. So the hourly chart will be relatively positive. There we are. So from this sort of congestion zone again, this is a classic setup, guys. The longer markets tend to go sideways in a channel, the breakout can be more significant. It took to mid-morning, but that's been quite a break. So again, hourly traders, first indication was yesterday afternoon, big up candle from the drift lower we'd had all day. So it had been short. Your stop loss might have been around there, and then boom, it gets taken out. But if you got in here, your stop loss is around about here. You'd still made a few pips on a very, very quiet day. Then you'd gone long here at on the 4 o'clock candle, over the 20-day, over the 50, and then up, and then it's gone sideways all through Asia, all through the early European session as London and Frankfurt woke up and came into play. And then 10 o'clock, 11 o'clock candle was the big breakout. We're back over 116. That's the big psychological area. So again, if you were long this on this particular time frame, my stop loss currently we're just around where that dotted line is there, at just shy of 116, and see where we go. Trail it up as the trend moves higher, and then you go up the time frames. This is see where the next resistance is. Well, look at that. That's look where we've got to. Lo and behold, as if by magic, we've ran to a fib level, a 61.8 fib level of the decline here on the 4-hour chart from the high here and on the 24th of July to the low on the 1st of August. That leg lower, 61.8 key golden ratio on the fib level retracement took us to 116.30, and that's where we've rallied to today. So those that had got in here on the breakout might have took some money off the table as we broke into that fib level. So a breach and break, or a break and then a breach properly of this key fib level here at 116.30 could easily take us to the 117 level on this time frame, on this 4-hour time frame. But obviously, again, you would have only gone long here yesterday on the completion of the 2 o'clock candle. Today's 10 o'clock candle took us even higher. So again, another one where your stop loss might want to be down here on this time frame. So we are moving up here. So anyway, the euro's better against the dollar. Sterling 133.25, also a bit better, but those construction PMIs haven't helped really the sterling this morning. So again, really this 4-hour time frame really remains still quite range bound. There's a suggestion this morning. So again, another story of a potential weaker dollars. We've ran into the 50 period moving average here on the 4-hour time frame, and then we've opened above it and higher. So this is positive as well. So that cable's positive this morning. Today we stepped down the time frame for the hourly time frame. There we are. There's that there's that movement sideways. There's the 9 o'clock weakness after the PMIs at 7 o'clock under the 20-hour and the 50-hour, but then we've come back in the last 3 or 4 hours and positive and breaking out of the range we were into. It was a lower range there, so it was a stepped range. Can you see what I'm saying there? See, it was very much sideways action yesterday and most of today, but we had poked higher here into close yesterday, so that was a positive. And then we broke above yesterday's high here this morning on the 11 o'clock candle. So you've added to your position and off we go. And again, that entry level was there on that short trade. I think it must have been from the 28th of July. So that's still a significant area, 133.50 for cable. Okay, so again, that's just trading this particular asset. Of this particular setup with the crossing EMA strategy, this 5, 9, and 21 exponential moving averages. Okay, so from cable and euro, you see the dollar's a wee bit weaker. Let's pick something else. Let's have a look at the Aussie. Similar pattern here on the hourly chart. Again, congestion zone, breakout high. So a high from the 4th. The beginning of Sunday. Was breached this morning. There we go. You see we come straight through there, and then there's the 11 o'clock candle again. So 11 o'clock candle corresponding with weakness in the dollar, and the Aussie has gone over the key .65, so positive. And again, some people might have cashed in on that, just on that move to 65, but we are still positive. So you get the gist. It's all about trend following with this particular setup. When things are going sideways. This is, you're short, you're long, you're short, you're getting stopped out all the time. It's short small losses, but when we get a run, you know, you can get a really good strong trend, and you can you know, very much take any losses back and also break the profit, obviously. Dollar yen 147.30, less direct, but you know, it's invert because it's the potential weakness in the dollar, but the yen's not great either, so they're sort of cancelling each other out. And this is very much here on the hourly chart. You see this line here is the beginning of the week yesterday, and you see we've been very much range bound. 147 being the support yesterday. And we're above that by 35 pips, and there's our support today. At the moment, obviously things could weaken, so we have got the corresponding weakening dollar situation over the last 4 hours. There's the 11 o'clock candle for the yen. So you can clear. Well, I'm saying you can. So 147.85 needs to be breached to the upside from yesterday and today so far. The actual high so far this week is at 148, so just over 148 and 7 points, which we couldn't hold. So big initial resistance at 147.85, and then 148 to the upside. So 15 pip window for yen to the upside on an intraday basis, and holding 147 if we're going to hold up. If not, we'll break and then could move down quite quickly there. Okay, so let's have a look at the thing that is actually looking to open. We've got the indices. So this is our standard. This is what I use most of the time, isn't it, on our discussions, are crossing EMA. But we've these are with the Tradelocker. All I can and this demo account, all I can use are 1, 2, 3, 4, 5 actual layouts. That's the maximum I can use. I mean, there's 20, 30, 40 I could show you. That all work well enough. But let's just use each of these layouts on one asset. Let's just. I think I set up the Dow this morning. I can't remember if it was the Dow or not on the lower time frame. So just bear with me a second. We come down to let's say the 5-minute time frame. Was it the Dow? Was it? Oh, it was the DAX, wasn't it? It was the DAX, because it was the DAX was actually open. So. Where were we? Right, this was, so let's just, so we're going to use the DAX as our default asset for the open. Then we'll look at we'll do the same for the Dow. So what have we got marked up on this particular asset? So here, this is the 8 o'clock 5-minute candle. You can see if we just move this over, you can see here the volatility you get on the actual open. See this one here? Hopefully you can. Oops, there we are. This one here, it's because it's 5 minutes. We've moved on a lot, obviously. This was our high for the day, around about 24,024. I just marked that on. So this is pre-market high. We obviously got a little bit higher than that. We actually went. The actual posted high was 24,038. There we are. And our low pre-market, i.e., before the German actual cash market opens, was down here. Through here, nice 3 candle floor here on our 5-minute time frame, because yesterday sort of started, or this morning started around about here, didn't it? So that was yesterday's. We went to test it here on early trades at midnight, and then again at 1 o'clock, and then again here at 2 o'clock. So that was our low pre-market at 23. This one here, 23,857. So call it 2360 for the sake of round numbers. And so what happened at the open? Well, we'd gone to our high of the pre-session before the market opened here at 6 o'clock and 7 o'clock, and then we'd been moving lower into the 8 o'clock candle. And this strategy had actually crossed and triggered a short position there at 7. You see that one there? 7:45. That would have triggered a short position there with the initial stop loss up at the high of the day, and then it would have trailed down. Okay. So that would have been nicely in the money, and the rules of it would have been you either trail your stop loss down and it reverses and takes you out, or you use it. We use the medium paced moving average, the 9 period, which is the green line here. So when the price closed above the green line, we'd have been taken out. So we'd have got in there at 7:45, and we trended lower through the open. and got stopped out at 8.15, just trending out. So we'd have made a few points, not very many, but a few. There we go. We'd have got in at 23,981, and we'd have got out at 23,975. So not many points to take the spread into account, but that's, you know, a friend, as we always say, that is trading. And if also the other thing you would have had to bear in mind is the volatility of the open. So if you'd pulled your stop loss down too quickly, you'd have been stopped out on the opening 5-minute candles. But you know that wouldn't have. It hasn't moved enough for you to pull that down enough. So I would have still had my opening at the open. I would have had my stop loss on the top of the opening candle from 740. So we'd move down. Again, you could have had a target down here at the 50 period if you want to do it that way around. I tend to just stay with it because the runs can run. What would have happened then would have we would have gone long here, and then that would have because the system, if you programmed it to trade the rules, it would have gone long, and then you would have been stopped out as it's crashed through this low here, because that's where your stop loss would have been. So you would have gone long here at 905 at whatever price that was, 23,989, and then you would have been stopped out there at 23,952. So that would be a 40-point loss or 30-point loss. But at the same time, on the completion of that candle, you would have gone short here with the stop loss flipped. So we reversed our position. Alternatively, you know, if you're just trading in the direction of the trend, you wouldn't have taken that retrace, this long position here, because remember we always say, you know, trade in the direction of the trend. So we would have that would have been a losing trade if we'd taken it. If we'd only been following the rules just to trade in the direction of the trend, we'd have gone short here with our stop loss up here to start off with, and we're still very much in the money. Now then, we could have closed our first position there as we reversed back through the medium one and seen what happens. Thought, fine, thanks very much. I'm off. There we are, 10:20. I've finished. I've got in here at 9:15. I've made some nice points in an hour. I'm off for the rest of the day. I'm not interested in doing anything else. If you've been, you know, watching and it's coming back, we went sideways for about half an hour. Then there's another big down candle. Remember, the size and the body of the candle is also important, guys. The bigger the body of the candle, the more significant the direction that we're going in. So the trend has already been established from the top here at 7 o'clock this morning. Where are the big candles? Well, there's that massive one we've just got in here at 9:15. Next big one here, 9:40. We've added to it. Next big one, well, here at 11 o'clock. There might have been some data in Germany. It might have been something about some German company, or all sorts of things. But it doesn't matter, does it? You're just trading what you see on the candles. So short again there, stop loss up here, and again sideways for what, 5, 10, 15, 20, 25. Next biggish candle was here 30 minutes later on 11:30, and then we're down again. Thanks very much. And again, many people might have got out on that. Again, we got to 11:45, sideways, and then we reverse. So again, you would have got out here as it's gone back over the 9 period moving average. See how we've closed over, that candle's closed over the 9 period. If you didn't get out there, you certainly would have got out there. And again, a potential long position, which hasn't played out again, has it? That didn't play out. Then we go short again in direction of the trend. But interestingly, our highs now are back to where we were at 11 o'clock. So our low currently for the live trading day in Germany for the DAX has been there at 23,805. Okay, so interestingly, I haven't mentioned anything about the numbers yet, have I? We got to within 5 points of 23,800. So again, these round numbers always come into play, guys. Remember where our high was? It was just over 24,000. It was 24,038. So we come through 24,000. We got, you know, 100 odd points on the board and in the bag. So thanks very much. Then we chop around during the sideways. So nothing going on. Long, short. So nothing going on. If we'd gone short, we'd have got stopped out straight away. Gone short again, got stopped out straight away. But look at the size of the candles, weak there. That looked like we could have had the bot at this point here, 1240. Let me zoom this up a bit now. You can see that. At this point here, we're just talking about candle pattern now, guys. Remember, big candle again, like we've had earlier. Looked like we were going up, didn't we? We had 5, 10, 15, 20 minutes of positive growth there. Tick for the DAX before we petered out again at 23,875. and then we've gone down again, but we didn't want to go down again, did we? So the lows for the day are getting higher again, aren't they? Look at what's happening here. That's our low at 12.25. That's our low at 13.05. That's our low at 13.50. And currently that's our low at, as I'm speaking, at 14. So we've got a bit of a, draw your trend line there. You can have a trend line there if you want. But, this is relatively positive. And that next big candle was significant because it breached both the 50 and the 20-day, 20 period moving average here. Remember, these are only 5-minute candles we're talking about here. So things can change very, very quickly. Obviously, if there's news. I've picked today for this because there isn't a particular big news item that's going to move things. Obviously, if we had a big news story coming out, that would make a significant difference. But right, let's just quickly flick. So you see what I've been doing there. So let's just quickly flick to the. I can't remember when we did it on the Nasdaq or was it the Nasdaq this morning, or we did a similar thing. Is it the Nasdaq? No, I can't remember. Was it the S&P? So I'm sure I marked up the American markets as well this morning. Perhaps I didn't. Thought I had. Perhaps it was only the. Oh, was it? Did I actually? No, there's nothing here on the Dow. Anyway, what we were talking about was trading the US Open, wasn't we? Weren't we? Sorry, excuse me. So let's just use the Dow because it's the one I prefer on an intraday basis. So what's been going on before? Let's do the same thing. So we would have done. So pre-market this morning, the high was here at 44,359. So you would have marked that in up there. There's our high. The morning there at 8 o'clock. So as on the European Open, we'd been moving up all morning. Our lows from yesterday and last week were round about here, through here, where we are now, very interestingly. See what's happening now. Literally, as the cash market is opening, we're down to test those. So your first level would be through there. So we are now testing the low of the day. And where's this take us back? And low of yesterday's American. This is the American session. No, this is the European session. Yeah, was all the way down there. So that might be something to plot on as well. So there's another low area. So we've already come in to test the low of the major session. The actual low of, in fact, that is the low of the day, isn't it? The 20. Yeah. So that's our low of the day has been tested already. So, and knowing what we knew about the DAX, the European stocks have been lower all day. We would have set this up. And, we were looking to take short positions. So, again, a bit like the DAX, we'd have been short there, short, out as it's come back over the, but looking to get, the trend is very much down there, isn't it? So, short there, that's turned around, taking you out. Looked like we were going to go long, didn't happen, turned around, back under the 9 period. Lots of sideways action here at 12.30. Another short. Added to your short there at 12.50. Well, the trigger was there at 12.45. Down. It's come back. So a few points on that. Looked like we were going to go long here ahead of the market open. But look what's happening here. Compare the size of the bodies of the candles here on the Dow compared to the DAX, because the market isn't open. So the big ones, as I said before, that was a big one into the new day high, and it hasn't happened, has it? We've had a bigger one there at 8.10 this morning on the European Open, was positive, but then it's got weaker. That looked like, again, a bit like we saw on the DAX, that looked like we were moving up over the 20 and the 50. Looked pretty positive here again at 12 o'clock. Didn't happen. Low. And interestingly, we went to test the low of the day. And so you would have been looking, although it's easy to say that now as we've seen what's happening, our next trigger was here at 14.20. So 10 minutes before the cash open, we would have been short here with this strategy. And you can see, guys, I'm not making this up, but you can see what's happening with our very own eyes. So there we are, short here at 14.20. Our stop loss would have been up here, nice and tight, the top of the turn. And again, you can see how that's the top of the price action there at 12 o'clock as well as at 2 o'clock. And we're short, and we're still short. Now we'd have got in here My stop loss is now top of this candle. I'm being quite aggressive because it's the open. We could easily give that up, but we're already in the money, aren't we? Using this particular strategy, just looking at the candles and the moving average. I haven't said anything about the RSI or the MACD or the ATR. But again, the ATR is quite useful for these situations because look at how I use the ATR when I'm trading short term is that the typical move on a 5-minute time frame for the US 30 currently, when I took my position, was 20, let's say 20, you see that? 20.45. Sorry, I'm any questions. Crisp and clear is always good, my friends. Crisp and clear is, oh, I've realised my great big head's still there. Let's make it a wee bit. Yeah, we'll have a look at gold in a minute, my friend. Yeah, absolutely, of course. I don't know if I missed your question. That was 20 minutes ago. So I apologise for that. I didn't realise I'd left my great big head on. There we are. I'll come to gold in a minute, Theek. I hope you're still here. But I'm just demonstrating this setup. So anyway, we're short from here, and we're in the money. Thank you very much, and see what happens with our stop loss there. Let's go off somewhere else. So let's have a look at gold for Theek FX 8863. If you're still here, my friend, I apologise. I've only just seen it. I wasn't. I didn't have that chart. So exactly the same strategy setup, but what's happening? Well, if you've been watching any of my videos, you know on the higher time frame. Let's go up to the daily time frame. Not that really impacts the 5-minute time frame. We're really sort of directionless as far as gold's concerned. So these lines that are on my chart here on the 5-minute time frame will from higher time frame. So again, you can see how these play out. Look at that. That's the 3370, and it's providing fantastic resistance for 1, 2, 3, 4, 5, 6, 7 candles here just now. And why is that significant? Well, if we go up to the daily time frame, I have to reset that. Sorry, oh, it's a mess. There's not a lot going on. It's a key sort of pivot area. Gold's been moving higher, edging higher this week. Obviously, we had the move on the 1st of August. We had a move on Monday and a minor move again yesterday. So sort of edging up Monday, Tuesday. So biased to be long on the daily time frame. But if we come down to today's action, the hourly time frame, well, what's happening? Well, we've moved up. We did form a new high. That would be the mark from yesterday. That's our high from yesterday at 3389.94. But since then, we've been lower and we've been under the 20-hour moving average here from 9 o'clock this morning. So today, gold is short on the hourly time frame. So we'll be looking to take short positions on the 5-minute time frame rather than long positions. So there we would have been long here, short here at 9 o'clock. Thanks very much. Up and then down, up and then down. Again, remember the story about the size of the candles, Theek and everyone else. You know, where's our biggest candle? Well, it's here just recently at little over 40 minutes ago. But where did it take us? It didn't take us very far, did it? Because it's positive, but it's ran to a daily resistance area at 3370. And look how it's a support area there. It's a support area there. It didn't work this time. Nothing works all the time, remember. But it's just interesting areas. The price we're at the moment here on the 5-minute time, that looks quite interesting as well, doesn't it? Look at this. A resistance. Is this going to provide support? Is it going to bounce back to the 370 from 365? Who knows? But at the moment, overall, we've been negative for the day on the hourly time frame. The daily time frame is still more or less broadly positive. That's the hourly time frame. As we've been down this morning, but we've turned around in the last 2 or 3 hours. So that might be looking now on these 5-minute timers to actually take the longer trade rather than the short trade. But again, none of that has really played out, has it? We haven't got there's a strong trend this morning. We've moved up. That's resistance. That's really the line you want to be looking forward to for the rest of the day. That 3370 Theek and anybody else who's trading gold. But it's a bit, remember my default time frame is the daily candle Theek. So I'm a bit, I haven't really got and again, you shouldn't have a position or a view. You trade technically what you see. And so, I'm looking for strong trend, strong legs like we had here and here and here. So this is a bit of a mess here, up and down, up and down, up and down. This looks like we're moving up. Again, you could say from this morning here, so that's the low. That low is higher. There's the support there. So there's another horizontal support through there at 360. What a surprise, another round number. Then we got a 50-hour, the 50 period moving average at 364. And then we got the 20 where we are now at 366. And that pivot area we can clearly see here, guys. So it's a bit directionless. I wouldn't be jumping in with big risk on the gold market on that market. But let's go back. That's explain things, Steve, my friend. Let's just go back to the indexes, which is what we were trying to focus on today, given it was the actual cash market open and the impact of the cash market and on other directions. So there we go. So we're even more in the money than we were when we left. So that's our entry. Our stop loss was here, wasn't it? I'm a bit reluctant to pull it down to the end of the candle because it's still a bit volatile. So I'll be happy to have it there at the, as we said, that's the way to trade it, the 9 period moving average. So let's just leave this setup like that for now. We'll come back to the other setups and see how they've traded out. So as far as today's trading is concerned, we would have gone short here. There, let's change the color of that. Make it a big dark. So it's, I can't see that, can you? I'm going to make it, what color can you see? Orange. Let's put orange on. So orange for go here. And our stop loss is all. Let's make the stop loss orange as well. So that's where we are here with our demo. It would have been short, entry there. Stop loss would have initially been up there. But that's our entry. That's our stop loss now. I might pull it down a little bit more. That's looking like quite a move. So that's our stop loss there. So from 44,252 to 44,137, we're nicely, or 167, we're nicely in the money on the Dow on the open on Tuesday, the Wednesday, I should say, of the 6th of August, despite some really strong earnings this morning. Disney actually had good earnings, but they've been marked down pre-market. Not as good as McDonald's, but certainly markets is being pretty tough. And look what happened. See, I don't want to say I told you so, but because that's one of my horrible personal habits. But 44,076, we put that on earlier, didn't we? And where is that? As I've said before, that's that low from this morning. Look at this, or yesterday's low. And what have we done now on this open? Bang, right into it. Bounced off it, but tested it again. So a breach of this, and I will be pulling my stop loss down even tighter. Okay, so that's the crossing EMA strategy. Let's have a quickly look at the others as well, see what it would have told us. So the pivot point one at the moment is, I'm calling it pivot point, it's Heikin-Ashi candles with the VWAP set at high, low, close for 3. So minimum is 3 minutes. So again, here we use the size and body of the candle again. Obviously red for short, green for long, and chop and change as the candle color changes if you want to. You can be a bit more sophisticated. Tend to only take a position when there's no wick. So here we would have been long, a big strong green candles there, long, still long here. You see there's and long with when there's no wick to the south, and we want to be short when the candles have got a big red bodied candle and with no wick to the north. So here we were long. The body of the candle is telling us the strength of the move. So big initial move here from this flat area, long, and then out as it's gone red. It could have flicked from long to short immediately there, because that bodied candle there, right at the top here at 850 here, has got no wick to the north. So that would have been short, but immediately went green. So I'd have closed that short out. I'd have then got short here at 910. And maintain that all the way down. I've got a bit question about here as it's gone through a doji, That would have waited. That's short, 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 and then out there, out or back in again there where there's no wick, and down, and then out there when it's gone green. Long here because there's no wick to the. Oh, there is a wick there, isn't there? So not necessarily long. It's gone red again. So I'm questioning this move up until here. So I got long here and then stopped out on that one. So that would be lose. That one's a nice big down thing. A nice big down, big bodied candle again. 945 there. And it's gone to the VWAP area. That's the other way to use the VWAP. You could have stayed short until it's hit the VWAP. Then we bounced quite positively. Again, that looked really positive as we bounced up. It's a false move up, isn't it? Big body candle. In fact, that's the biggest of the morning there with the Heikin-Ashi candle off the VWAP. But we've a false move higher. Nowhere near the high we had in early European trades at 44,358, and it's moved down again. So we were short. We'd have been long there, out as it's gone red. Possibly long there, but it's small. I would have been weighted a bit. Then I would have probably got long short there because I'm biased. I'd have been biased to the short side, although I shouldn't be. But that's what would happen. I'm a bit indiscriminate. I would have certainly entered. I would have gone if I hadn't gone short here. I'd have gone short there because we've moved down, and again, there's no wick. The body of the candles aren't massive compared to what we've had before here, but I'm happy to hold on. I'd have added on that one, on that big candle, and then waited to see what happened with the VWAP. Again, we had a break and a break low, so that looked like that was happening. It didn't. The VWAP held, and then we turned our nice short position into a long position here at 1320, out here at 1330, back in there because we were bounced off the VWAP at 1345, out because it's flipped, and then back in there, and I would have added there, to be in all honesty, at 1440. I thought, here we go. We're going to test this previous high from this morning. Are we going to breach it? No, we didn't. We turned around quite quickly. So out of that short, and then definitely short here, and then stop loss up here, and then bang, we've moved lower on into the open. See the open here again. See, this is the opening candle, the 1330. Okay, so whatever it's as I say all the time, guys, it's not the strategy, it's not the setup, it's how you interpret it and how you apply it that makes or loses you money. Okay, so it's about finding, as many great traders say, and I've got just gone here. Mark Douglas says, master one market strategy or one market procedure flawlessly, execute it flawlessly, do it so you can do it in your sleep without thinking, make it a completely subconscious automatic reaction. Market, it's one of his big mantras in this fantastic Trading in the Zone book about managing yourself and managing your account, and really managing one particular asset. So yeah, we're still short on that strategy as well. So that's the Heikin-Ashi candles with the VWAP works very effectively as well. Next layout. So we've done our pivot points. It's called pivot points. That's the EMA we demonstrate. This one is the Bollinger Bands and stochastics, more of a mean reverting strategy. The rules from this one is you wait for the stochastic to cross and the touch of the extreme of the Bollinger Band, basically. So similar sort of patterns here. Let's just we wait for a touch. So let's just have a nice run there. What happened there? We had a touch of the outside, so we're waiting at this point for a cross down of the stochastics, and that's happened at that point here. The initial, just put that short in there, so that would have been a short there, as that's so we've been waiting from that. That would have been a long, would have sort of been long there. That's just outside the Bollinger Band. Now we're waiting for the stochastics to cross again before we enter short. We've waited all that time. Is this? Yeah, it's still fine. So we've gone short here. Our initial target is very close because it's just the midline on the Bollinger Band. So that would have been target one. and then we'd stayed short till we touched the outside. Target 2 would have been down there as we touched the outside of the Bollinger Band again. We then reverse immediately, so that's been a successful trade. We then go short here because this is, can you see that? Let's touch the outside of the Bollinger Band. We turn around immediately, and at the same time we cross in the oversold area here with stochastic. So we go long here. So that was a short one. This would have gone long here. Target is there. We're still running up. We then get to target. So target 1 would have been here at 13.45. Target 2 was the outside of the Bollinger Band, looking to turn around. And again, we'd have closed that long position there and immediately gone short, interestingly. So we'd have closed at the top and gone short on the completion of that because in fact, it looks like it's crossed on that candidate, hasn't it? You wouldn't have confirmed the cross till there. So you wouldn't have got short there. You'd have got short on 5 minutes later at the bottom of there. So this system would have been short there. Instantly, target 1 was hit on 5 minutes later. Target 2, 5 minutes later here, just ahead of the open, ironically. And again, if you're trading this strictly, you would have been out of this position, and you're looking to go long now here with this mean reverting strategy. This is more of a mean reverting strategy. The other two are a bit more of a trend following strategy. But you can see what's happening again without it's just following the rules of the strategy and no analysis. But what you can see here is this massive, bird's beak expansion in the Bollinger Band. The upper band moving up, the lower Bollinger Band moving down. Lots of volatility. So on these extreme moves, if you hadn't closed your whole position, which you would have done, because that's what's you can see we're at the bottom. Expected if you added another short, but this system now here is looking to go long, waiting for this cross, because we've already touched the outside of the Bollinger Band there at before the market actually opened at 14.25, and we've been 5, 10, 15, 20, another 25 minutes. We've poked right down here to 44,029, as we saw. In fact, it's lower than we were before, wasn't it? Yeah, 44,000. So a new low of the day, 44,029, and this is looking to cross. So we'll come back to this one because this one's looking to perhaps take a long position. It might be a bit speculative because we might have some more downside momentum, but the stochastics haven't yet crossed. So again, it's about patience and waiting till it's confirmed. Wait till the candle's complete, and that's sort of what's happening here. Probably in the 14.55 candle, this may cross. We might have to wait till 1500 here. So that's our Bollinger Band and stochastic setup. Next one, we've done 1, 2, 3, 4. The MACD and SAR. It's again very straightforward setup. Just 2 indicators waiting for a flip and a cross with the MACD. So we're looking for a cross of the MACD and the signal line, and a flip of the parabolic SARs. So parabolic SARs, a bit of a trend following strategy. So, but the first instruction here is the crossing of the MACD and the signal line here on this system. As you can see here, it's a bit messy. You can see here we crossed to go up here. Parabolic SAR was always at the bottom, so we were long here, and it didn't play out, did it? It flipped again straight away, so we were out again. So great when the market's going in one direction, like we had here. Cross was there. Wait till the parabolic SAR flipped, which is there. So we got in here and trailed all the way down. Got out there we'd have got out there as the parabolic SAR dot has crossed, gone from above to below, and then 5 minutes later, the signal and the MACD line cross again there at 11:10. We go long, but it didn't work out, and messy. Next cross of the MACD and the signal line is here at 12:55, and it's that should have been long, so we'd have gone long here, but the parabolic SAR flipped here, so we'd have gone long. No, short. One more time. Shh. Oh, hang on a minute. No, sorry. Right, this is what I'm talking about. This one here, this cross here. So we're looking to go short because the blue line has gone below the orange line here, the MACD signal line crossed that way around. So we'd have got waited till the parabolics are flipped, and it didn't flip till then. So we'd have gone entered then with our stop loss up here. So that would have been a losing trade, but we'd have got out because the parabolics hasn't flipped back, has it? But the MACD has crossed again, so we'd have got out there. So it wouldn't be as bad a worry, a loss as we thought. Again, this is a bit more of a delaying one. So we're looking to go long now. Parabolic SAR doesn't flip till 13.55. We are long here, and up we go. But again, it flips back, and we're out here on that. We then get a cross and a flip of the parabolic SAR at the same time there. Again, that 14.25, 5 minutes before the market's open, big double flip, and we were short, and we are still short on this system because we haven't flipped back, and we haven't parabolic SAR haven't flipped. So that's short and remains open on this particular strategy there from 14.25. So our stop loss would have been up there. It's come down to at least here. I might pull it down a bit tighter, so we might be getting taken out, but certainly there's a few points on there. I'd probably still have it there. Just I would probably have pulled it down a wee bit just so we get a bit more points on the back, knowing me if I was doing this manually. But you can see the MACD is still moving lower. The parabolics are still lower, so just hang fire and stay patient. So that's the MACD and parabolic SAR on open, also in the money. So all these strategies, you can see, if you follow the rules, very much in the money on the open so far today. And finally, I call this demo. This is the triple exponential moving average, the orange line, and the more significant, or what I feel is more significant, more subtle, is the adaptive moving average, or the moving average adaptive, or you often see it called the adaptive moving average. Similar maths to create the same thing. So the triple exponential moving average is one line for three moving averages, which is the orange line. You see it moving up and down. So we're looking for crosses of these two moving averages. But the big caveat with this is when the purple line on here, the moving average adaptive, is flat, i.e. horizontal, you want to be staying out. You want them to move in direction. Okay, so but still follow the crossing and see what happens. So and be either above price action above or around both of them, or below both of them. So as you can see here, as we've already seen today, big move here on the head of the open. So this would have been long here for about half an hour into 2 o'clock before, as we came to talk to you this afternoon, but very, very much short here. In fact, again, it's not until the 11:22. Oh, it's the 2-minute time frame. That's right. Let me just put that. So we're comparing eggs with eggs. Sorry, it's 2-minute time frame. But again, you can see the highs have been rejected, so flat. So looking to go long. We'd have gone long there certainly, or possibly long there, waiting till we cross. In fact, I would have gone long there at 13.40 because we're above both the moving averages there, supported by the TEMA. So nice and long, stroll it up. So here at this point here, my stop loss would have been here, and would have been turned around and stopped out. So that would have been stopped out there, having gone long there. So there's a few points in that on pre-open, but certainly a big short would have, well, not big short, but a short would have been added there at 14.20, and then added to, if not here just before open, but certainly here on the conclusion of the opening trades, because that's big candles. Both those moving averages have crossed and they're moving down. We're still in them, but you can see there's a bit of a floor literally at 44,080 at the moment, so quite volatile. I'd have pulled my stop loss probably down to about here. It might have been taken out on this big up candle here at 55, but certainly again, points in the bag for trading this strategy is what we're saying on the opening. So for that opening 20 minutes, we've had it move. Doesn't happen every day, Doesn't happen on all markets, as we saw with the gold market. Actually, let's just flip back to the gold because Steve was asking about that. But certainly, because these are the markets that are open. So I trade this approach on these short time frames. My favorite two assets for this approach are the DAX, the Dow and the DAX, the ones we've seen. And I'm happy to. I have all these strategies set up and trading with different risk levels and different parameters. Because, as I say, some of them are mean reverting strategies. Most of them are trend following strategies because that's my psyche and that's how I like to trade. So a bit messy here on the DAX, but the DAX is within an hour of closing, so we've been negative most of the day. Push that pre-market low. You see there's that low we talked about on the other charts. Didn't really remember the setup we had on the DAX. I've marked it up here. And we've come back to test it, but that's provided the support. So we had a 20-minute dip below yesterday's low, and now we're back into that support area. So nicely demonstrated there on the TEMA and the MAA crossing setup. The cleanest of them all is the simple VWAP and Heikin-Ashi candles. And again, this is the DAX. So short, longish, short, it's chopping about. So I'd have made my money today and I'd have been out. Now it's too messy now. We're under the VWAP. We've tried to come back to it. So really, there's that short area. So that would have been another. I'd have gone long there. I know it's easy to say now, but I'd have gone long here as well because this area was in play from yesterday. The attempted move lower hasn't happened. So we got support. So each of those green, and wherever we rally, well, there it stopped at VWAP. We might do it again. We might break through it this time. Remember what VWAP is? It's volume weighted average price. So we are under that currently. So we might be going back to it. But whatever strategy you trade, my friends, make sure you always manage your risk, and you never let your losses get too large. So let's just go back for thick and relieve with gold. I say obviously not necessarily impacted by the technical opening of the US markets, but again, you see the strong trends you get with the Heikin-Ashi candles. So long, short, nothing going on. Short, longish, but didn't get up. Messy, long, short. Nice. Looked like that was really positive, didn't it? And look what's happened with the VWAP. Here on the Heikin-Ashi candles, we've already burst through it, and that's a significant burst. So where this candle closes could be quite significant to the upside, but certainly that would have been enough there at 1450 for a buy on the gold on the close of that candle, round about through this level here at 3370, with $2 to the good at the moment. But as you see, it's rejected it, broke through it to the downside earlier this morning. So the low of the day, certainly putting in here at 10. It's again, trend lines, whatever else you want to put on there, but that's moving higher as we speak. Gold on this time frame. So thank you for your time, guys. Tomorrow is the big one for the week, certainly for us here in the UK. It's the Bank of England with their rate announcement. Everybody's expecting a 25 basis point cut here from Andrew Bailey and his crew. Lots of dissent within the Monetary Policy Committee. Will we see that again? Probably. Possibly not everybody if everybody goes along the cut, because we had the 2 and now 3 members last time voting for a cut. So we'll see how that transpires. There may be one stickler for an unchanged rate. Rates are, we don't need to cut rates. The Dub is saying. So let's see what that's like. We'll be live here from 11:45 Universal Standard Time for the announcement tomorrow. So join me for that. We'll see the reaction to sterling in particular, obviously, and the FTSE on that. And enjoy the rest of your day. If you're new to the proptrade.com, you can get quite a significant discount on your new trading. If you're not new to us, you still doesn't make any. There's nothing wrong with asking, but our most popular account is the $25,000 two-step or standard account. Here you can see this, our most popular account. It's $175. It gets you $25,000 worth of equity. And if you're new to the proptrade.com or you're new to prop trading, and certainly new to us, if you type in new 25 in here, click the apply button. That's our coupon. It gets you a 25% discount. So $131 gets you $25,000 worth of equity to play with. On our simulated accounts, you've got 2 steps to get through or pass and prove to us you know what you're doing, that you can cope with losses and keep your losses small. Maximum daily loss 5% on both phases. You breach that on either phase, the challenge is broken, unfortunately. But that's what you want to be looking for, guys. You only need to make 8% on the first step and 5% on the second step to get to the funded account stage. Tell us, prove who you are with your documents, and then we can a couple of days later you get your funded account, and then at the end you trade your funded account, get to your target. As you can see here, there's no actual target. It's up to you. As long as you're not losing too much, as long as you're not risking more than 3% on any one particular trade idea. At the end of this, when you want to claim your money, 80% of what's in the account can be yours, and you get paid that on the Friday. Every Friday is payday. Friday is payday. A lot of our clients love Fridays because that's when the real funds go out. So you're using a small investment of a few $100s to get you a big leveraged equity. $130 for $25,000 very rich to practice and demonstrate you can do this, and then the result is the prize, if you like, is real cash, real crypto, or wherever you are in the world, however you want to be paid. So, and there's no funny business. We got no dodgy rules and conditions. They're all very straightforward. Obviously, all companies have rules and terms and conditions, but honestly, you went through it with a fine tooth comb. There's nothing questionable in any of that. We are what you see. We're very honest, we're very straightforward, and we're really good to deal with. I'm very, very proud of, and we all are, of our support team on the Discord channel, because that's where most of the interaction with you all is done. And the team there, Thompson, Johnson, and Katzen, laser responses. You get instant answers to your question, and that's me. That's Stuart 7 is me. So I was chipping in earlier to something. Solanke was asking about asking when do you payouts on Friday. I said yes, so long as you request it by 1 minute to midnight on Thursday. This is Universal Standard Time, so currently, or GMT. You will get it on Friday. A lot of people say, "Well, on Friday." Well, when the processing guys get through to it, there's lots to do, but you will get it on Friday if you put the request in by 23:59 GMT on the Thursday. Okay, so give it a go, guys. Come and join us. We're here to help. I'll see you all tomorrow for the Bank of England. Stay calm, stay safe, and happy trading, everyone. All the best. Bye bye.